Good day, guys. Jason here. Welcome to my channel. And those that haven't subscribed and love what I'm doing every week, please hit the subscribe button. Whatever that is red color, hit it to gray color, and I'll thank you forward for that. And before I proceed, this is the disclaimer that I'm supposed to do. Trading in futures or commodities and forex market is one of the riskiest forms of investment available in the financial markets and suitable for sophisticated individuals and institutions. The possibility exists that you could sustain a substantial loss of funds, and therefore you should not invest money that you cannot afford to lose. So please take care of the money management, as setups will be setups. We need many setups to make it happen. In terms of accuracy, it's there, but of course setups will fail. That's why take care of the money. Don't invest with whatever you cannot afford to lose. So let's move forward. For this week analysis, which is fall under 8 to 12 this month itself, the following week, which is 8 to 12 February, what I'm looking for to trade or taking a trade is all the major pairs, all the highlighted. I got 6 pairs already here for me to go into market if any action starts to happen. What I've done is I'll map all the key area that I wanted to take, meaning all the support resistance that I'm going for, and I'm waiting for a certain rejection over there with a certain formation on a smaller time frame before I take an entry to hold for a swing or an intraday, depending what's my plan that day itself. So let's move forward for GU. So this pair is pound versus USD. As we can see, very obvious here, price been climbing and climbing and climbing for the past few weeks, 2 months actually. All right. So since it's been climbing quite uptrending, some people call it uptrend, some people will call it a rally, and somehow at this particular area, which on the higher time frame, which I map it on the week, my key area on the week, start to have a lot of wick formation, meaning wick, WICK, not wick, but a lot of rejection, a rejection wick. So we can see very well if we zoom in a little bit more. Price been staying there and created a top, very nice standing top over here. So the question is this. A lot of people would just say, hey, this is a very nice area to sell down. So why not once the price enter there, we just press sell away. And for me, I wouldn't do so. It's because of all the pressure push over here on the midterm trend is actually still siding very much on the strength of a rally of a midterm, continuing the rally of the long-term trend. In this situation or this scenario itself, what I'm truly looking for, it's a massive rejection from the top here to the bottom. Perhaps, especially on the day itself, I would love to see a pin bar formation, a rejection of a pin bar formation, a very solid pin bar rejection, perhaps from this area itself, not so long, maybe up to this extent. As long as this formation start to form on the day, then I would actually go into the market and do a sell down. But before I can confirm that this is a pin, usually I will have a double or a triple confluence for me to take a sell on a higher time frame. Not necessarily that the pin will work. It could be a bullish pin, it could be a bearish pin. But how do I make a certain confirmation of this particular pin is the one that I'm supposed to take? Even though a single time frame tells me saying that there's rejection over there, not necessarily that it will work. The further confluence that I'm looking for is I would actually go down to a smaller time frame like a H4 or H1. Let's one time frame down to have a look. A trend being formed, right? This is a trend, and this trend, question is, it's not invalidated yet. As long as this trend is not invalidated yet, it could be at the end of the day start to come down here, perhaps another leg being formed. Who knows? So will this area be still valid to me? Yes, in terms of higher time frame, I'm still looking for a sell, but on a smaller time frame, I would actually look for a buy. So depending on what we actually wanted to do I want to follow the small time frame to do the buy, continuation of a buy, or do I want to sell it off based on a higher time frame? So the preference is very much up to you guys. If I were to intra, I would actually buy. If I were to go for a long-term swing or a mid-term, yeah, it's actually a long-term swing, I will actually sell. Meaning a long-term swing could worth about, at the end of it, 200-300 pips of a reward back, or could be more, could be 300-400, depending on how the price move versus the sentiments that allows it at the end of the day for me to hold a position. So there'll be a lot of more monitoring that needed to be done. The formation of an uptrend is still valid. To sell down based on the midterm uptrend would actually more or less like it's a very high risk thing for me to take. It's a gamble, I would say. So for me to really truly want to sell this position down based on a based on the higher time frame, at least there's evidence saying that this particular trend that we move is invalidated. What does it mean invalidated? It means that this area, or it could be at the end of the day created something like that. Who might knows? Anything can happen in the market. Price love to go where it want to go. This is the story behind the price. So if it start to move this way, or could be moving this way, whichever you want to create the further leg for it to push up. If it happens, there's no 100% that this analysis is gonna happen. It's just a scenario or bias of what's gonna be happening. If this happen, so still a buy. I'm not selling this position yet until this happen. Then perhaps I'll consider buy. Because at the end of the day, a lot of pattern might happen. I mean, structure might start to behave weirdly like that as well. Could be. Then only it start to have a double top or maybe a slightly higher, come back down here, retest a bit, then only you come back down, then goes back up here again and come back down here again. At least a formation of a downtrend being formed already, solidified it, or could be a head and shoulder, it could be a downtrend, could be a double top, whatever is it, a certain confirmation that says that in at least H4 or H1 from there, then only I'll go back to D1 to have a look, does it form this or any form of rejection that matches back my downtrend that form for my entry. So that's what I'm going to do for GU. To wait. If I want to trade GU by next week, I would actually still bias a uptrend based on the midterm, based on the short term, and going in for an intra. That's what I'll do. Okay. Hope that you guys are able to follow what I'm trying to say. That's what GU is happening now. So that's analysis for GU. Then the next one would be EU. EU would be euro dollar itself. So for euro dollar formation, it's a bit nice actually. Price been trending down nicely, created support, created resistance. Okay, support and resistance. These are all my key areas that I mark. So I'm waiting for a rejection here. Could be that's gonna happen here. The next few bars could be okay, or a certain rejection here to sell it down. But for now, if I want to trade on Monday, always remember this is long term, this is short term or mid term. Yeah, just try that. Okay, this is long term. This itself could be a mid term, could be a short term. Being a reason of, if we have a look at 4 hour, it's a very nice pushing phase that EU is going through. If we go slightly lower, it's a trend. Yeah, maybe it's not so much of a trend over in 1 hour. If we were to keep on flipping down time frame, we are able to see a much more details of what's going on. See, in 15 minutes itself, it's a very nice uptrend. It's like up, down, up, down, up, down, up. Yeah, console went up, went down again, up, console delete. So In order to invalidate this, it gotta invalidate. I hope that you guys know how to see an invalidation of a uptrend or a downtrend. A rally is not a rally anymore. How do we see? A drop is not a drop anymore. How do we notice it? That's what we gotta understand. Trend ends at some point. Trend will turn. Yeah, that's a saying. The trend is a friend until it ends. So the question is, how do we determine that that's the ending of a trend? So if we can manage to find out how an ending of a trend works and how small time frame work it up all the way up to a higher time frame and match back them all together, we are able to find a certain traits in between, be it intraday, be it a mid-term swing, be it a long-term swing. It doesn't matter. It works all the same. The concept is the same. It always runs on a key area. It runs on the market structure. That's it. So if I were to trade on Monday, I would love to continue this, a buy. It could be like, hey, it might stop out. People will say, traders will say, or majority traders will say, hey, this is a support and that turn resistant. So why do I not want to sell down all this way? No, not that I never say I cannot sell. But if I want to sell, same ideology with my pound US dollar itself, at least give me some solid super evidence of a very heavy rejection that matches back up towards my smaller time frame. If my smaller time frame is a downtrend that matches back up on my higher time frame as a pattern or a price action pattern or a rejection pattern, then I will consider a sell. But if that never happened, it's still a buy for me. I'll be following whatever the midterm or the short term is doing, and I'll go into the market for intraday and keep on buying the market until that particular trend of this died out and invalidated. Only I'll monitor further. Will it form a starting point or a midpoint of a downtrend for me to sell down that matches back up on the higher time frame as the price action pin or price action candlestick or rejection pattern? That's what I will do. So that's what I'm going to do. All right. Okay, that's for EU on Monday or the following week. I'll just monitor this pair further. If I want to intra, I'll go for a buy. All right, that's for EU. For the next one will be Aussie dollar. Aussie dollar on day itself, it's really interesting, this particular thing. If we notice, it's a beautiful chart now. It's beautiful formation, I would say. Price been climbing heavily for the past 1 month to 2, and it consolidated right above on my higher time frame area, key area. Just went up a little bit more and kind of like got stopped out. If we see more in details, we can notice that price is gradually forming lower high, lower high, lower high, and eventually broke the supposedly stay on a very powerful support. Once it broke, it did a retest on that area. The question here is, can I consider this as a downtrend yet for me to sell down or not for the beginning point of a long-term trend? To me, not yet. Because in order for me to validate that this is a much longer term downtrend that's about to start, it could be a starting point, it could be not a starting point. But I would love to have one more confluence or one more market structure to happen first before I would say that it is a downtrend. Because a downtrend are supposed to form. I mean, this structure, it's a very famous structure, or I would say everybody understands this structure. We see this every day, but how do we use it? That's the biggest question. So it's missing a leg, I would say. It's actually missing this leg here. Haven't formed my full run of a downtrend market structure. If it haven't formed, I wouldn't say that this is a downtrend yet. It's still, for me, in the longer run, an uptrend. Price did consolidate over this area here. If we were to mark it slightly, price did consolidate over this area, created a nice formation of a lower high, lower high, lower high, and lower high. Price this breakout, price retest. So once price retest, and guess what? A lot of traders, I would believe, this is just a belief, I would believe they would say, hey, the downtrend started. But for me, nah, it haven't started yet. It's just a hint or a signal saying that I might start, but I haven't started yet. It's more towards, okay, I'm going to start this engine. So I put in my key into the keyhole, I twist it, but I haven't cranked it. So the market haven't cranked it yet on the formation of the downtrend. So if I were to trade this on Monday, it could be the Aussie session itself, could be any session itself, as long as the formation starts, I will go in as an intra to buy this structure. Intraday, not mid-term, not short long-term, but as an intraday. Intraday means that I go in and go out on the same day, or within a few hours I get the hell out of market with my profits. It could be lost as well. We will never know. So it's always a long run thing. It's a process. As long as the analysis stays the same, the structure stays the same, the plan stays the same, nothing changes, in long run, believe in the process, it will work. It will definitely work, because the holy grail for making it in money market, it's always about the process. It's never about the setup. I don't give a shit about the setup, whether it at the end of the day make it or not. I only give a shit about it after I have 10 or 20 setups and see the results. That's the key for me. Not too sure for you. Well, why I would say that I would be buying such formation of a bullish pin on the smaller time frame. If we have more information, we can see very well that, let's say, go down to 15 minutes, the price been going high, lower, high, lower, high, lower, high, lower, high, lower, high. Yeah, it did the consolidation here, broke it out, so consider my lower high here, and still moving towards the upside, and the new high is being created. So if I were to sell this, am I committing suicide now? It's a formation. I'm going against 15 minutes. I'm going against 30 minutes to sell. I'm going against 1 hour to sell. But yeah, I'm going against 4 hours as well. So all the bullish bar, you have a look. But I'm not going against the day, or in the long run, or it could be the week, could be the month, could be the day. See, this is the interesting situation, or a lot of challenges that traders faces. Should I follow the long term or should I follow the short term? Both is right if you ask me, depending on what we plan to do or need. Do I want to follow this or do I want to follow this? In order to follow this, as usual, same thing that I did mention for pound versus dollar and euro versus dollar, same, exactly the same. Nothing changes. I would love to see a formation of a massive rejection around this area for me to sell down. If it doesn't happen, and yeah, this rejection must match back my smaller time frame as a downtrend, only I would consider it as a valid rejection, or else it's not valid to me. To you, not sure, but it must at least do that before I sell it down. It could be a double top, it could be a triple top, it could be a head and shoulder, it could be a downtrend, it could be a consolidation, breakdown, went up again, come back down again, whatever the structure is on a smaller time frame which form this particular formation. It could be a 2-bar, it could be a 3-bar formation price action, it could be a 4-bar, it could be a consolidation break over here at the end of the day. We'll never know. But I want to see a further confirmation with more confluence, only I sell it down. That's for Aussie dollar. Or else, intra, I'm still biased by intra, please. Okay? Because I would love to buy this. Alright, next pair. Dollar yen. Interesting as well. See, yeah, this is a very good example that I can share with you for what I meant for pound, euro, and Aussie. What I'm looking for, because it entered a key area of mine on the higher time frame. It's actually rejected. Yeah, here. Alright, that's one of my key area that I marked. So that key area itself rejected, and from what? Then a very nice pin drop. But like I mentioned, I wouldn't take this pin yet on Monday. It's until I can find a second confluence or a third confluence saying that this pin is a valid down. So what do? I actually will drop down all the way to 4 hour and have a look. It's a engulfing bar. So still an engulfing bar. So what engulfing bar? Does engulfing bar means anything? No, it doesn't mean anything yet. The reason because can you see that even though on midterm or H4H structure, this formation is still a valid uptrend. So if this is a valid uptrend, no signal or no indication that price is forming at least beginning of a downtrend, give me more rejection, give me more signals, give me more confluence saying that on the smaller time frame like 4H or 1H that me dollar yen, I'm coming down. No, never mention anything. So I only see jang now. But this leg is not powerful enough. It kind of got stopped out at right at my 1 hour key area. So this 1 hour key area could bounce this price all the way back up here or here or here. We'll never know. So for me to take that pin on Monday, at least this bugger gotta break all the way on my final key here and close below this price only I would consider that downtrend form. If that happens, then only I will go into the market and start selling the market intra or could be long-term swing or short-term swing, doesn't matter. Without that, I'll still no go for a sell yet. It's not formed. It just got stuck right here. Unless this happened. That's a very nice formation. Or could be whatever pattern here. As long as one leg get the hell out of the whole area here. I need this leg to get the hell out of this area, or else it's not valid for me to sell it down yet. So for me to buy via intraday for this as well, I wouldn't take any intra here as well. No, big no on intra, because if we were to notice, there's a mini downtrend happening now. See, price consolidate broke. That's it. Nothing means that doesn't mean anything. I don't take consolidation break. I don't trade breakout anyway. I only trade retracement. So yep, doesn't mean anything to me. In terms of, is it going down? No. Is it going up? Don't know. Is it going nowhere? Yes. Why did I say going nowhere? Just have a look at this. Where the hell you want to go? Just say, hey, I broke out. That's all. If I were to sell here, it's a bit risky. But to continue this bugger, anytime got stop out here, not really worth my money over this setup compared with this 3 setup. Okay, hope that you guys understand. So Monday itself, I won't be taking this position anyway. Not yet a sell to me. If it at the end of the day open on the new bar and all the way down, I might be wrong. I might be right. But at least I got something confirmed. The downtrend happens, I can always go back to intraday and sell it down. Doesn't matter. I could be missing out the higher time frame setup or long-term swing. Doesn't matter. I still have the short terms intraday to get in and out market. So as a trader, we gotta be smart. Does the structure allows us to intra? Does the structure allows us to go long-term swing? That's up to us to analyze and decide what we want to see and how we determine the market, what's going on. Because candlestick, reading areas, reading chart, or I would say technical analysis, it's a language by its own. If we know how to decipher that particular language, yeah, it's great. We are speaking one more language other than French or Chinese or Spanish or English. Doesn't matter. All right, back to dollar CAD, Loonie itself. Loonie itself, it's rejected based on, like it or not, price on the higher time frame. It's consolidating, but we can see very well that price created the uptrend and went into the consolidation again. So this particular consolidation went into a key area of my uptrend itself, a key zone that I would love to see. And in order for me to buy long run, price got stopped out here. Can you see that the formation of low, it's already high, lower high, all happening concurrently, and the price push. If I were to buy, I'll be buying into a zone. Could be this zone. This is one of the zone that I map, and be it for a reason of what, a massive zone over here on the higher time frame is the super high time frame zone, is the long-term D1 time frame, mid-term, long-term, whatever you want to call it, is a D1 key area that I map, rejecting there, sell down, buy it up, nah, intra, not really interested. Reason why? Simple as this. If we were to go down to a smaller time frame, even though, why we didn't flip? If we were to flip, we see more details. If we didn't flip, we see less details. That's the only difference. And see these buggers doing what? Price is ranging, just did a small little breakout. So as usual, ranging, no go, bye bye. Keep aside, not too sure what's going on. Sayonara, I'll see you again. That's all. I'll be telling Loonie this. Not too sure what's going on. Ranging market means buyer and seller is being pressured into each other into a zone until the ranging being broken, go all the way up to the area. Only I would say, hey, buyer win or seller win. So that's the direction in the much longer run. Could be mid-term run, could be long-term run. But if I want to sell this position, buyer intraday, because you will say, hey Jason, it's like kind of like creating this. Yeah, it's creating this. So does this. You see a very nice rejection being ongoing here. Like 1 time, 2 time, 3 time, 4 time. Yeah, I broke out. Yeah, so what? You broke out, but you're still within that zone. If you truly broke out, what I want to see, if you truly broke out, like that, it goes all the way down. Or else, nah, not a very solid setup yet. There's nothing here. No information. Price wanna go where? Can't be biased here. So I'll let the price do whatever that it wants to do, go wherever that he wants to go. Only I decide next step what to do. So that's for Loonie. Alright, next back to Swissy. So for Swiss or Chief, Some people call it JIP, some people call it Swissy, some people call it dollar Swiss. Alright, beautiful setup. Big rejection candle happens on a key area. If we look at it, it's a very nice combo of up down, meaning if we were to combine these two candlesticks together, we can see very well that it forms a pin. Hello, every rejection, if you combine it all together, it's a pin bar, if you notice, and if you understand price action, that's what we're looking for, a rejection, that's all. Alright, but further confluence in it just broke out from a consolidation. Some people will call it a head and shoulder. My head, my shoulder, my left shoulder, my right shoulder, and price went up. Yeah, whoever took this, congratulations. I usually don't take head and shoulder. It's a bit too risky. It's not part of my setup. I would actually, if you ask me to short this market back down based on the higher time frame rejection, saying that, hey, the price been coming down, what? It's a very nice setup. Why don't I want to sell it now? Nah, not yet time. If I were to sell it down, how far can I go? Say, all the price consolidate here. If I were to short it down, it gets stopped out anytime over here, meaning that that's lots of traffic that the price gotta go. This is number one, we gotta understand. Number two, that we must understand it's, yes, it's a pin, like I mentioned, but is this a solid pin? Can I take this sell? What's my further confluence? Actually, I've been giving you a lot of my trading secrets to you guys that students gotta pay for it, but I'm sharing a little bit here and there for you. If you will follow more of my videos, eventually, most probably you will learn it for free. If possible, if you're able to pick it up, what I'm doing. Alright, further down, one time frame down, we can notice that yes, it's going down, it's forming a pressure push, it's a bearish push, it's a pushing phase, whatever that you guys want to call it, doesn't matter. But to me, it's still an uptrend, not a downtrend. In terms of intraday, yes, it's a down in terms of intra, but in terms of midterm, it's an up. We are looking at the midterm first, because just now we want to, let's say we want to sell it based on midterm or long term, at least create something in the midterm or a shorter term that give me some structure there to support my these two particular brother here, which is form a pin. Nah, too bad it didn't. Hey, if we were to flip it further down, what? Jang, not broken. So very hard to tell. Price might anytime boom all the way back up here. Might being a reason of on the smaller time frame, price is still climbing. Created a lot of key areas here. Anytime that particular key area could be one of them to push it back up until this happens. If it starts to create this, or could be creating this, boom, boom. Hey, where's my boom? Alright, boom and boom. Yeah, extra one leg. Yeah. Alright, let's start to create this. Yeah, then only I officially say that, hey, that's my brother there. Yeah, open, right, bigger. That's my bro there that I'm supposed to sell. If not, forget about it. I won't be selling this thing. Okay, right, that's my 2 cents, my analysis, my market analysis for this particular 5 major. Usually I'll do analysis based on major. During the reason major don't cross, if you want to play crosses, it requires more confluence rather than just technical. It requires a little bit more on what I would say crosses pairs, compare pairs, how pound reacts versus the rest of the pairing to determine that is it true pound strength or the other party's strength to move. I'll cover that a bit next time. It's not that if you understand that, you can play crosses easily. You don't understand that, if you go into crosses just based on technical, a bit tricky, I would say. Yeah, you gotta understand the correlation, the anti-correlation behind it as well. Best implement some sentiments towards it. Learn to read economic economic calendar, learn to read sentiments, follow up on news, what's going on. And one of them is like this Biden stimulus running now. Past the Senate, House not yet. Even though he claims that he got a lot of votes cited to him. All right. One thing. All right. 6 pair done. Hope that you guys like the analysis. Those that haven't subscribed to my channel, I'll say again, thank you. Just subscribe to it. If you like what's being analyzed here more, I'll do it more. And if you notice this particular video, the previous video I've been doing it using lines, meaning that one line is my support resistance. That is just to show that how support resistance work. But the true way of analysis is how we find key area within that support resistance to find rejection, to find trend in between of a trend, in between of a smaller time frame trend, and how they react towards each other, and to find rejection, whether we want to plan it for intraday, be it we want to plan it for medium term, and be it we want to plan it for a longer term. Or three different same analysis, three different way of entry, three different way of holding, different trend moving. Because higher time frame might be going up, mid term might be going up, short term is going down. So at the end of the day, who do we want to follow? It's up to us. You got the time, do intra. Don't have the time, go swing. That's what I would say. So find one of them that suits your lifestyle, go in it, don't force it. You missed it, you missed it. You don't miss it, you don't miss it. Follow the plan, and let's wish for the best that the process works. That's all. We have to have the confidence in the system, and in order to have confidence in the system, we got to know in and out of that system being tested in the past. Testing, just invest into a backtest system, use it, do it 100 times, 200 times, 300 times, understand how it works, do it live market, meaning backtest on take the 2020 data, do it like live for the whole year and see what's the result. That's the only way we can improve. All right, thank you again, and next week may the pips be with us. Bye bye.